Back, Wall Street's banks released their first quarter earnings this week, and the results were mixed. Wells Fargo took the top spot, earning $6 billion. That's a 14% jump from last year. JP Morgan's profit dropped 19%. Why? Because of a big loss in mortgage revenue. Citigroup, Goldman Sachs, and Morgan Stanley all surprised investors by beating their own estimates, while Bank of America was the only major bank to post a loss. $6 billion hit in legal costs. Meanwhile, the Federal Reserve's annual test shows that some U.S. banks are strong enough to withstand another financial crisis, but not all of them passed. Shraysi Tandon has the details.
The Federal Reserve delivered a blow to banking giant Citigroup after rejecting the bank's plans to raise dividend payments and increase stock buybacks. In its annual stress test, Citigroup was one of 5 banks that failed the Fed's review. This year, Citigroup, HSBC North America, RBS Citizens Financial Group, Santander Holdings USA, and Zions didn't have enough capital in reserve to convince Fed regulators that they could survive a severe economic crisis like the one in 2008 without a government bailout. Citigroup was the only one of the top 5 U.S. banks to fail the Fed's tests.
Well, they're critically important. Basically, we're going to find out how well the banks will do in the event of another financial crisis, and they didn't do particularly well the first time round, so I think this time round it's probably more important we know what the result is going to be.
Citigroup received the largest government bailout in 2008, $45 billion in cash and billions more in loan guarantees. This is Citi's second stress test failure in the last 3 years. Overall, the Fed reports that 29 out of the 30 largest banks in the U.S. have enough capital to withstand severe disruptions. These include big swings in global financial markets, a severe drop in housing prices, and a steep increase in unemployment. Some investment bankers say the Fed's recent rejection of the Citigroup plan is actually good news.
I don't know that it's a worry. I mean, it's the whole point of the stress test is to find out where the holes are and to fix them. And I think it's people probably feared a little bit that it would be just a whitewash, and everyone would pass and it'd be rosy in the garden again. That's not the case, but that means the stress test is working.
Now, the Federal Reserve has been consistently making its annual stress test even tougher, which may have some bankers grumbling. But overall, many banking analysts argue that this has given the American financial industry a much-needed boost in confidence. Shraysi Tandon, CCTV, New York.